Hey everyone, I thought I'd do a quick video on Prime Days because I've had a few questions about those recently. So it's a bit of a tin hat concept of mine and just something I've noticed in the market over the years, and it's kind of based on who is really moving price. Now, a lot of people talk about market makers and they point fingers at them, and it's always the market maker, it's always the exchange. I quite strongly disagree with that because realistically, market makers make the bulk of their money out of bid-ask spread. So they're going to buy something from one party by filling an order, and they're going to sell it to another, and if they can get a little bit of difference between those buys and those sells, then that's how they make the majority of their money. They love retail because retail buys and sells more often and more erratically. They don't really like big money. Big money is slow and takes a long time to buy or sell, and a lot of big money deals in OTC and all that kind of thing. So if you believe that um, market makers aren't really the ones who are shoving the price around, and more to the point, they are just the ones facilitating the market, which is kind of what they do and how they make their money, then you start to ask the question of, well, who does move the price? And from my opinion, it's really a couple of things. It's algos, number one, which is just set and forget. There's people out there with large sums of money who are just efficiently trying to take little bites. So basically, bots. If you think of them as bots, but very smart bots, not just the kind that buy and sell every time the dollar up or down on a token, but ones that actually look at structure and um, judge volume and judge when buying pressure and selling pressure is switching, and actually take into account how long that would averagely continue for, so that they jump in and they follow the wave, which is almost self-fulfilling because they're going to actually bring in more buying pressure, etc., etc. And a lot of the trading we do, and a lot of the trades I take, are purely based on those patterns, having realized over a long period of time that when certain things happen, certain other things happen, and therefore we can trade that and we can print money. So therefore, why not do that? So Prime Days is all part of that thesis that if the majority of price movement is whales and algos, and it's based on closing structure, so if you were to have a 1 day close, which closes every single day, and it was to close higher than the previous day, and let's say the previous day was a distribution day, then you would argue that price has now flipped distribution with accumulation. The therefore buying pressure is in control, and you could expect that from that price point or lower, that there would be willing orders to buy the token and send it up higher, and that's all based on a daily close. So because everything before the close is just noise. So um, if you've got a whole bunch of algos all around the world, and they are bidding up or selling down price based on structural closes, if you're a whale and you want to actually create a liquidation event, buy a bunch of tokens and then reverse it to send it back the other way, so e.g. a day for a liquidity grab, you're not going to want to do it on a day when there's a whole heap of structural closes that might come in, and then all those algos are going to fight you and stop you from being able to get the price back up again. So the concept of Prime Days is, number one, it's based on TradingView anchor dates. It's not generally based on exchange anchor dates. Number two, you basically take Jan 1 as day one, Jan 2 as day two, etc., for the entire year. And then you can take, say, the first 2 days, and then the next 2 days, and they become your 2 day candles, based on the start of the year. And throughout the year, you'll get these various different dates, which are going to be prime numbers. And on those dates, there will only be a 1 day close. There will not be a 2 day, 3 day, 7 day, 30 day. There'll be no weeklies. There'll be no monthlies. They'll just purely be a 1 day close. Now, why is that important? Well, it's important because if I was a whale and I was trying to dump price down to grab an order or to launch an order into people's liquidations, and that's a really good way to place a really big order on the market without affecting price is you've got all of these willing liquidations and stop losses that are just market sells of, say, the long. So they close the long position, they sell their position, and if at that point the whale launches limit orders to buy those positions, there's because of all that liquidity, the price won't rise back up again rapidly. And so why did they want to push it down into the liquidity? Because they wanted to buy your liquidity. Now the issue then becomes, what if it's a day where there's a whole bunch of structural closes? Well, then because the price might have gone down, they might have created resistance. They might have closed below break levels. They might have created hold levels. They might have closed below trends. And then, of course, every algo in the world is going to want to fight to sell against the order that they just bought to try and long back up. So, why do these markets become Elmo chaos days? Well, it's because that particular day is the best day to be able to dump or pump into liquidity and then reverse what you've done after establishing your position. So if you see a really big dive on a prime day, should you be buying it? Probably. If it's got confluence with structural levels and all that kind of thing, and liquidity on the heat maps, should you be buying it? Well, yes, I do. And I do that because more often than not, they always run the price back up. Um, so, yeah, hopefully that explains what the thesis is behind a prime day. Um, it it kind of all, like I say, ties in hand with hand in hand with. I don't think it's really market makers and exchanges that are moving the price around. Like it's just not in their best interest, and it's not how they make their money. And um, they, like anybody else, do want to buy into um, tops and bottoms and that kind of thing, particularly if they have OTC divisions and all that kind of stuff. So sure, you'll see them transferring funds around, and you'll see them buying on dexes if they support dexes, etc. You'll see all that happening during those times, but they're just a trader like anybody else when it comes to certain parts of their business. But really, Prime Days is about grabbing liquidity without creating structure that will then fight the price movement back up to a point where it could be sold to make a profit, or it's about grabbing that topside liquidity if we're talking shorting, and then taking it back down. So that's kind of yeah, that's Prime Days in a nutshell. Hopefully that explains it. Don't know if I have so well, but yeah, feel free to continue to ask questions. If you want to chat about it, jump into the Discord and yeah, go from there. Cheers. Bye.